Let me ask about how much the climate has changed. We've had kind of this protectionist rhetoric out of the U.S. We've had Brexit negotiations start to really get rolling. Do you expect 2018 to be a lot different from 2017?
No, I think 2018 is on track to be at least as good a year as 2017 and indeed 2016 when it comes to fundraising. Over the last 4 years, the private equity industry in Europe's raised around about 250 billion euros for investment. That's double what was raised in the 4 previous years. So right now, these political headwinds that we were worried about last year really don't seem to have had any kind of negative impact on either fundraising or the investment climate here in Europe.
Yeah, do you expect the bark to be kind of worse than the bite? I mean, everyone was expecting so much more protectionist legislation out of the U.S. We haven't gotten so much. Brexit negotiations, occasionally we see this flash of a push for a hard Brexit, but it seems that a transition period will be inevitable. So this kind of push to decentralize has been softened a bit, hasn't it?
Yeah, I think there were a lot of concerns this time last year when we had this event that 2017 was going to be a year of real political turmoil. Elections in France, elections in Germany, elections in the Netherlands. And in the end, what we got was governments re-elected that were essentially mainstream, centrist, establishment political parties. There are still some clouds on the horizon, though. If you look at those election results from last year, parties of the far left and the far right actually did really rather well. And next year, we've got elections to the European Parliament, elections across the whole of the EU 27 member states, as it will be by that point. And there is a danger, I think, that we end up with politicians being elected at the EU level that do come from those more extreme parties. And it's those politicians that will then be responsible for setting the regulatory agenda for private equity over the next 5 to 10 years. So 2017 didn't have the bite that we feared, but I don't think we're completely out of the woods yet.
So what are your biggest concerns as far as the regulatory environment as it affects private equity investors?
I mean, right now it's got to be Brexit. I think that's the top issue for people. We've done a lot of work with our members in helping them to understand what the possible implications might be of the UK decision to leave the EU. The challenge they've all got is we don't really have much more clarity here in 2018 than we had in 2017. A little bit of progress was made at the end of last year on the 3 big aspects of the UK's divorce settlement, but we still don't know for sure what kind of transition arrangements will be put in place, how long they'll last, how comprehensive they'll be, and we've got even less idea what the longer-term relationship might be. Now, the private equity industry is pretty good at adapting to all kinds of different scenarios, but right now, members of Invest Europe are having to spend a lot of time that they could be spending on deal sourcing and portfolio company development on trying to navigate a whole range of different Brexit scenarios. So we're hopeful that over the course of the next couple of months, we actually might start to get some real progress that will enable people to make concrete decisions about how they're going to develop Brexit contingency planning.
Well, one of the most important aspects of that is where they actually are, right? I mean, there's a lot of talk about where funds are going to be domiciled, where they'll be allowed to domicile if they're investing in Europe. Do you see already a lot of private equity investors moving out of London and onto the continent?
When I speak to our members, you hear a whole range of different responses to Brexit. There are certainly some that have already either established a new entity in Luxembourg or Ireland. Some of them have beefed up what was an existing presence in those countries. And they're looking to ensure they've got an insurance policy. They want to be able to continue to market to EU 27 institutional investors. So they've gone through the process of getting a license and getting a passport in the EU 27. There are others that are completely taking a wait-and-see approach, that still are comfortable that a transition period will be put in place and that they've got at least another 2 or 3 years to think about it. And then there's a big group in the middle who haven't yet activated a Brexit contingency plan, but are doing a lot of thinking and drawing up a lot of scenarios. So we've not seen a mass exodus from London. I don't think we ever will see a mass exodus from London, but some people have certainly started to take concrete decisions to create a new presence and move some people out of the UK and into particularly Luxembourg and Ireland.